Hey, welcome back to the Mining Pod. This is your news roundup. Just Colin and myself, Will, this week for you guys. We're going to be hitting the Bitcoin mining news. Not a ton this week, Colin, but that's okay. There's still things to talk about, especially the Cry Corner is going to be particularly juicy this week. So stick around for that at the end of the podcast. Spicy, icy Cry Corner. But first, a word from our sponsors.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com.
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com.
Okay, as always, we got to get into our review of the mempool brought to us by Luxor Technology. Colin, take it away.
Yeah, so a little bit of hopium, a little bit of tears on the hash rate index data page. Hash price is at a cool $55 per bet hash per day. Not the worst, especially if you're running next-gen equipment, but certainly not where miners would want to be currently, especially with expectations that Bitcoin's bull market would be a little hotter than it is currently. Bitcoin's chopping around just under 100K as we record this at $98,365. And we are probably going to have a negative difficulty adjustment coming up. Difficulty is estimated to drop 2.47% in a few days here. This would follow on the heels of a 5.61% difficulty adjustment upward, which was the largest we've seen since last November. And that would be obviously a welcome reprieve for miners. There's been very little breathing room recently as hash rate continues to come online and Bitcoin's price and transaction fees are not moving the needle for mining revenue. Just a quick note on the hash rate. You know, we hit an all-time high around nearly 850 exahashes a second a couple of weeks ago. Right now, Bitcoin's hash rate is kind of just bouncing between 814 and that all-time high. So everyone's still patiently awaiting one Zeta hash. Miners are deploying hash rate a little more slowly, probably because of a number of factors, including the fact that hash price is just not keeping up with expectations. And potentially in the U.S., as we've reported on, a lot of miners are having trouble getting ASICs through the border, which is no doubt contributing to the slow growth of hash rate. So good and the bad, right, for the miners who have their ASICs held up. But overall, for the network, maybe a welcome reprieve as we expect a negative difficulty adjustment in this next cycle.
Hard to mine Bitcoin if you can't plug it in. You can always do it with paper and pen, but it might take a little bit. Yeah, not much going on there. I will say that sentiment in Bitcoin mining is quite low right now, even with slightly higher hash price than a few months back. That was like a true bear market, I'd say, for Bitcoin mining economics. There just doesn't seem to be that much interest in Bitcoin mining right now. It even seems like there's no interest in mining stocks. A lot of people have just kind of moved on. The AI HPC thing, like maybe we need more info about how that's going to change that market. But right now, that even seems to be like a washed narrative. So maybe we're going out of into a bear market narrative right now, even though price is above 100K.
Sentiment in general is kind of bearish, which is funny because Bitcoin's at 100K, right? I do think the AI and HPC stuff has really sucked a lot of the air out of the room for these Bitcoin miners. I think the market in general is kind of waiting for the shoe to drop, the next shoe to drop, I should say, with a lot of this stuff. Just recorded a really good podcast yesterday with Luxor's director of energy markets, Haley Thompson. And we were basically talking about how there's really limited growth potential in Texas for a lot of this AI and HPC stuff. And we kind of came to the conclusion we would not be surprised to see acquisitions or mergers or some sort of collaboration between some of these Bitcoin miners with hundreds of megawatts in the pipeline and some of these AI and HPC companies. So,
yeah.
Anyway, going back to what you were saying, kind of slow on the news this week.
Which was a great time to take a look through the books and come up with a different angle. So you did a great piece in our newsletter, which everyone should go subscribe to. You can find a link in the show notes, talking about institutional holders of Bitcoin miners. And I shall say, looking at our data scraping service that we are working on for Blockspace, we do see quite a bit of institutional bids into Bitcoin miners right now, which is classic, right? Like institutions come in size when retail's sleeping and they start like building up positions. So we had some news around Kengo was getting some bids from like Tencent and a few other East Asia firms. And we've seen some other Bitcoin miners having institutions make purchases into them, like Jane Street with Irene. That might be a market making thing, but there was Vanguard and Coors a few weeks back. Tell me about this piece and what you found out.
Yeah, like you said, a good time to just look through the books. I think this is a story that's always interesting to people, looking at how much institutions have a stake in some of these public Bitcoin miners. If you go back to 2021, I didn't do historical for this because I didn't have time, but your former colleague, Lily Rhodes at Compass, wrote a pretty good article about this back in 2021. And she covered, I think, 5 or 6 or so. And the stakes back then, I think it was like 30% would have been on the higher end or 40%. I don't even know if certain miners got to 40% of institutional stake. That would have been on the higher end. Now that's commonplace for some of the largest public miners, right? As you can see from this chart, percentage of outstanding shares owned by institutions, Core Scientific clocking in at 85.61%. This is data that I pulled from NASDAQ. As far as I'm concerned, or as far as I am aware, it's accurate. Some of this might be a little bit noisy because we're in the middle of a reporting cycle, right? So this will no doubt need to be updated once 2024 numbers come in. But 85.61% from Core is outstanding. Not as surprising, though, when you consider the AI pivot and also the bankruptcy that they came out of a few years ago, right? Second most is Cypher at 64%, and that's really largely from one owner, V3 Group, and that's like their only stake in a Bitcoin miner, which I think is interesting. Then you go down the list, Mara at 59.8%, Riot at 56.4%, et cetera, et cetera. The lowest on our radar here is BitFuFu at 0.39%. That could be an error. I should have investigated it a little bit more. Like I said, I was short on time with this one. But it could also just be as you pointed out before we started recording, well, it could be just per the fact that Bitmain owns most of BitFuFu and they're just not selling shares, right? Or they're not wanting the company to issue shares or sell to some of these institutions. But the thing that's interesting too about that is that if you look at BitDeer, I should have done Kango for this one because I think you'd see the same thing. BitDeer's institutional holdings institutional holdings of BitDeer are only 21.24%, indicating maybe something of a bias in Wall Street against miners in East Asia. Nothing to confirm that other than just the numbers, but my hunch says that there might be something there. And one last thing to say about this, just looking at portfolio value and total companies held by some of these institutions, BlackRock, no surprise, has the largest stake of these institutions or of any institution in public Bitcoin miners at 1.9 billion, holding 8 companies. Vanguard comes in second at 1.8 billion for 7 companies. That V3 Holdings I was talking about, they hold almost $600 million worth of Cypher. That's their only position. Then you go down to State Street, one of the largest and oldest banks in the U.S. at 500 million with 9 companies, and so on and so forth. A lot of institutional exposure. None of this is that surprising given where we are in the maturity of these companies. One other thing to add, a bank's exposure or an institution's exposure doesn't necessarily mean it's for their own portfolio. For BlackRock and for Vanguard, for instance, it's for a number of funds, BlackRock's ETFs, Vanguard's index funds. And as you said, for someone like Jane Street, who has a fat stake in IRA now, that's for market making, right? But that's still notable in itself, right? It shows that there is investor appetite for these vehicles. So thought that was a fun little thing for the newsletter this week. If you would like to see more analysis like that in your inbox, go to newsletter.blockspace media and subscribe to our newsletter. You can also go to our website and find our newsletter sign up. So
yeah, definitely just go and click into the show notes and you can find the newsletter there. I think one thing that we can't be lost in here is like, yes, these institutions are purchasing them like BlackRock, Vanguard, et cetera. And those are going to be on behalf of retail, possibly. People are purchasing these through an ETF product, things like that. But there's also hedge funds, who are using like Interactive Brokers or whoever else to purchase these assets. And the more that these mining stocks get placed into ETFs and get placed into these sort of things, I think it relieves some sell pressure. No one's really like going to rotate out of an ETF product as easily as maybe just holding a mining stock itself. So I think that is beneficial long term for a lot of these Bitcoin miners. One thing you can look at also with these Bitcoin miners is just the amount of investment meetings they're going to now at bankers. If you go to their IR pages, and they're always on the road selling their stock, they're constantly doing this now. I think this market is completely different than it was 4 or 5 years ago. And it's a lot why the coverage on the show has like started moving a little bit and less been like that grungy Bitcoin miner in the field content that's really fun. And we're focusing more on like financial aspects of it because that's the way the industry has been progressing, especially with the advent of AI HPC. It's just getting a little bit more grown up. Speaking of which, and speaking of BitFuFu, let us go over to BitFuFu, who had one of the only few press releases this week for Bitcoin miners. The other would be Core Scientific, which we will get to in a little bit. BitFuFu acquires 51 megawatt operational data center in Oklahoma, expanding U.S. miner footprint. I'll hand this over to you in a second. The most notable things about BitFuFu is, yes, its connection with Bitmain. It's unclear to me if there's a stake between the two companies, but Bitmain has funded BitFuFu to kind of get off the ground. There was a large purchase order a few weeks ago that we talked about on the show as well. That was done at like a higher premium between Bitmain and BitFuFu, but also is beneficial for BitFuFu. And they have about 1 gigawatt in the pipeline. They've been growing a lot in Texas and mostly Oklahoma area, which I think is also notable for our friend Charlie Spears, who obviously has been mining Bitcoin in Oklahoma for a little bit. But tell me a little bit more about BitFuFu and why this one is interesting to you for the week.
Yeah, the reason why I picked this one out, number one, I think it's just always interesting to see the acquisitions going on between public miners and private miners. I think per my note about the opportunities for hyperscalers or AI and HPC data center companies to acquire power via Bitcoin miners, I think you're going to see the same kind of pressure on Bitcoin miners with other Bitcoin miners to expand, because there are starting to be, like, you're starting to see increasingly bottlenecks in places like Texas and other Bitcoin mining hubs. Because with the AI and HPC gold rush, we don't have enough power right now to furnish the demand that people are projecting. So I think you're going to see acquisitions continue to play a really important role in some of these miners' expansion strategies. The other reason why I wanted to point it out too is because if you look at their most recent investor presentation from November 2024, they're running almost 300 megawatts in Ethiopia, which is a lot. I think they're one of the large, they're like certainly like the largest player in that region, right? That's just an insane amount of hash rate to have in that country, which is still relatively small. I think you've quoted about 600 megawatts in total in Ethiopia right now. So yeah, BitFuFu almost has half of it. With this recent acquisition, BitFuFu will up its hash rate in the US to 296 megawatts, which will surpass its Ethiopia footprint. I think this is notable for a few reasons. One, it signals that maybe they don't have the opportunity to continue to scale in Ethiopia, or it signals that they are trying to increase their footprint in jurisdictions that U.S. investors and Western investors see as less risky. This is something that we noted during the Hive and Bitfarms deal that we covered a few episodes back, where Hive kind of gets a win-win with it because they get to come to their investors and say, look, we just acquired 200 megawatts worth of future capacity for a competitive market rate. And we are going to have a lot of cheap power in Paraguay, where we're also building another 100 megawatt site. But for Bitfarms, it's also a win-win for them because they can go to investors and say, we are really recalibrating to a more politically and economically stable jurisdiction in the U.S. We're going to lean into the PJM power market with our Pennsylvania acquisitions and sites via the Stronghold deal. And there's this argument to be made that a lot of banks and institutional investors in the U.S. would rather see Bitcoin miners expanding in a jurisdiction where they can actually accurately price the risk versus one where they have no concept of how risky an investment is, especially one that's to the tune of almost 300 megawatts, which is tens to hundreds of millions of dollars, right? So I just think that's an interesting move. And as you can see from this investor presentation, they've now got Bitcoin mining sites. Once this Oklahoma deal goes through, they'll have Bitcoin mining sites in 10 states. So really expanding their footprint. BitFuFu is a stock that both here and when I was at Hash Rate Index, I did not cover as much. I would like to continue expanding my coverage to them because they're really one of the sleeper ones. I think there is still this huge gulf of information and maybe trust between the East and the West when evaluating some of these East Asian Bitcoin miners. I think we saw that perfectly too with BitDeer, right? BitDeer, as our friend Brandon Bailey pointed out last September, was massively undervalued when compared to some of these other Bitcoin miners in the US. And that delta has been kind of shored up since then. But I do think that for whatever reason, there's a disconnect between what some of these miners are doing in Western investor spheres.
Yeah, the East versus West thing is certainly there, which I think hurt the BitDeer narrative there for a little bit. And I think that's out of the bag now, and they're really priced well, and people are interested in them. Oddly enough, I think what you do see when people are underpriced in that sort of situation is you see large institutions or owners come in and purchase lots of shares. So you saw that with BitDeer and Tether, right? Like Tether realized there's a huge opportunity here and went and purchased like 25% of their outstanding shares. So with BitFuFu, Bitmain's obviously working with them and has been like deploying a lot of stuff through them or doing deals with them. And I think you just we'll see that happen because there's going to be a bias towards the riots, the Maras, and the others out there from Wall Street. And they're going to not get these other players to work with them because of it. So there's advantages to being on both sides of the wall there.
And to just cap off what you just said, I think your point about all these CEOs and the CFOs going on roadshows to the investment banks also helps them here. A lot of these miners that are run by Chinese nationals that are based out of East Asia, they're just not as publicly facing. They don't interact with the Western investors as much. They're staying in their own ballpark, right? Their own side of the world, which makes sense. They're also much more reticent to hop on the horn to talk about things, right? I mean, we've had this problem trying to get individuals from some of these East Asian Bitcoin miners, publicly traded companies to come on the show to
it's impossible. You can't get any of them to answer an email.
Yeah, they just don't. And I don't know what that is. I don't know why. They just are much quieter and they don't really want to be as publicized. I think part of it is there is this, in China at least, there is this conception that with media, a lot of it is sort of pay for play. And they really want to drive the narrative. And so they don't want to be in a situation where they might get caught off guard from a question that they didn't have prepped beforehand, right? Or something that they didn't actually, suggest themselves. So,
hey, but if you are a Bitcoin miner in East Asia and you want to talk to the mining pod, hit us back. There's probably an email from us.
We have lots of questions to ask because some of these companies are like some of the most impressive with operating and executing, right? So
it's honestly kind of nuts. Like Kango came out of nowhere, and it's just and you can't get a line back from any of these people. But maybe one day. For now, we will just sit back and do our analysis by looking at the old blockchain.
Big players in Bitcoin mining demand stability, regulation, and trust. That's why NiceHash has moved its headquarters to Switzerland, the country known for its strong regulatory framework and for keeping its cheese locked in a safe. As one of the most regulated mining platforms in the industry, NiceHash provides institutional miners with a secure, compliant, and transparent solution to manage and maximize their mining output, delivering the reliability and performance expected from the best mining pools, along with firmware, monitoring software, and other essential mining tools. Contact a NiceHash representative today to learn why the top Bitcoin miners are making the switch to NiceHash. You can find out more info in today's show notes. And when you contact them, let them know the Mining Pod sent you.
Let's go over to this great piece from the Texas Blockchain Council. They conducted a study with them in the digital chamber, and they hired someone to do this on their behalf and found some pretty positive outcomes for Bitcoin mining in Texas.
And nationally, turns out Bitcoin mining is good for local economies, actually. A few highlights from this report: the economic impact in Texas, the Texas Blockchain Council and their colleagues found $4.23 billion in total expenditures in the state, $1.67 billion in gross domestic product generated, $1.02 billion in income generated, and 12,219 jobs created. National economic impact, $10.56 billion in total expenditures, $4.14 billion in gross domestic product, $2.58 billion in income generated, and 31,020 jobs created nationwide. I think the job creation bit is interesting because it really tracks the proportional the breakdown of hash rate proportionally per state, right? Texas has roughly a third of the US's hash rate, maybe a little bit more. And we're seeing that in the job data reflected here. A few things I will say before I kick it over to you. I love seeing this. I want to believe that these numbers on the upper bound are absolutely correct. That being said, Texas Blockchain Council is a Bitcoin and blockchain oriented lobbying firm, basically. And so it would behoove them and all of their donors to have positive data on this end. That being said, no one else is going to run these numbers. For years, we have heard how Bitcoin mining is destroying communities. You had hit pieces about people in Granbury, Texas, like having headaches and strange diseases from a mine that was 30 miles away because it was so loud. Yeah, right. And then you had other things about Bitcoin mining destroying the planet, boiling the oceans, all this other stuff. And even when they did cite job data, they would basically say, well, when you actually look at how much power they're consuming, they don't actually employ that many people per megawatt. Yeah. I think the takeaway, if you're going to even take the most bearish number on how many jobs a mine creates, is the fact that those jobs would not exist without the mine being there, right? And this is something I think you covered well in the Big Empty documentary, where you were going to that town in Texas and you were talking to the people working at the mine, and you actually got their testimonies about whether or not they enjoyed the work they were doing and they were happy for the opportunity. So while I'm taking this data with a little bit of a grain of salt, I do think that directionally this is correct, and it's good to see this out there because it is at least something that we can point to and say, yeah, it's not creating zero jobs like some reporter at a big media company might like to intimate. But that's my piece, so I'll kick it over to you.
Hey, hard to get these numbers in the first place, and even if you take them down by 20% across everything you just mentioned there, it's still huge numbers. Billions of investments and thousands of jobs. Bitcoin mining will never be like a huge job creator just because you have your workers on a rack plugged into a wall, and that's what creates money. And you only need like one person for every few megawatts. Trained, skilled worker, obviously. So a lot of upskilling to get there, but you're never going to need quite a lot of people. However, there's a bunch of things around it that do create jobs. The truck drivers to get to the sites, the security guards who are watching the sites, the energy that has to be pulled all the way to the site. And then you have like all the stuff around that has to support a Bitcoin mine and supports that activity. So what we've seen in these rural regions when Bitcoin miners move in is that typically the hourly rate of wage goes up for everybody in the town. And that's because there's all these different economic benefits from having Bitcoin move into the backyard. There's the crazy stories and there's people frustrated about things, but that happens all the time when new industries move in. And overall, it's a net benefit and net positive. So congrats to Texas Blockchain Council and Digital Chamber of Commerce for getting these numbers out there. I hope they're used for good going into the next calendar year, and especially into the Texas congressional stuff calendar that's going on right now.
For the Strategic Bitcoin Reserve, yeah.
Well, just the session as well, because the last session, I believe it only is every other year, Texas has a session. And last time there were some bills they could have been very damaging to the Bitcoin mining industry. Oddly enough, the lieutenant governor of Texas is not pro Bitcoin mining, actually doesn't like it, and has believed a lot of the FUD around the energy and demand response with Bitcoin miners being a problem for the grid, when ERCOT's obviously embraced it for good reasons. and the governor of Texas has embraced it for good reasons. But for whatever reason, there's still like a few of the Republicans down there that are like not sure if they're on board for it. And I think these sort of case studies and numbers can only back up the Bitcoin mining position.
Yeah, and if you actually follow some of the money there, I wrote about this for Forbes a while back. I believe this was 2022 or 2023. My memory is slipping. I think 2023. There were a few bills that were proposed in the Texas Senate that would have imposed a cap on how much Bitcoin miners could curtail, and also impose, I think, an excise tax of sorts on either their curtailment or just their general revenue. And if you look at every senator, and I think they were all Republican senators who proposed that, I think every single one of them had taken money in PACs that were supported by natural gas peaker plant companies. So I thought that was really interesting because it's like, the people who are getting their, campaign funding from nat gas peaker operators don't want Bitcoin miners curtailing and kind of operating like their services. So
yeah, there's competitors for energy down there. The battery operators might necessarily not like Bitcoin mining, things like that. So let's go over to this Core Scientific story, which I thought was interesting for the week. A lot of people have been waiting for a Core Scientific headline to appear on their timeline once again. So this one's from our friends over at the Miner Mag. Core Scientific plans to acquire Alabama data center for HPC expansion. Core released AUBX's 40,000 square foot building in September. So context, Core Scientific obviously did the deal with CoreWeave last year that really propelled them forward. They had $12 billion in guaranteed revenue extending over the next few years, really moved Core's stock price from like languishing, not doing too much, certainly better than it was coming out of bankruptcy. And it became sort of like a star for quite a bit there. And then it kind of settled back in. And like I joked, I think on the podcast a little bit ago, like Core Scientific's stock kind of became like the Bitcoin mining stablecoin. It just wasn't really moving that much. People have been waiting for an HPC AI announcement from them. They are still mining a lot of Bitcoin. They still have a substantial Bitcoin mining fleet, but they've obviously been like the poster child for moving into AI HPC. So let's look at this deal a little bit more. They announced on Wednesday, become the operator of the facility after signing a lease and plan to exercise an option to purchase the infrastructure. It's estimated to make an initial capital investment of $135 million into the facility, with a total investment in the project expected to be $400 million. So, there's some more stats for you on Bitcoin miners actually leveling up job creativity and investments into local economies. There's a lot of stuff about this that we don't know yet, but I do think in general, we know that there's probably going to be some sort of hyperscaler at some point moving into this. Maybe they have multi-tenant, maybe a single tenant. Why? I think we should be, we'd be remiss not to mention one thing as we kind of talk about this story. Why is it that some Bitcoin miners are pulling this off and others are not? Why is it that a Core Scientific is able to pull off this hyperscaler story and get a CoreWeave in there, but a company like a Hut 8 or someone else has not been able to pull off that story so far? And I think it just comes down to experience over time. Core Scientific has been in the data center game forever, and like their operators and founding team came from data centers even further back. And that experience really matters when you're undergoing this pivot. A lot of people have, just played the press release game, but they've also put in substantial purchases and infrastructure and investments into pivoting. And it just doesn't seem right now to be really like pulling it off. It doesn't really seem like there's much going on there. And I think it's because that experience and connections into the traditional data center world matters a lot. One fact to back that up is what Riot did last week, and we covered on the podcast, where they brought in Jamie Leverton, who obviously we've had on the podcast a few times. And they brought her on to investigate AI HPC and how Riot could turn into this. They didn't just try to do this themselves. That data center game is different. It's a different beast than mining Bitcoin. And I think you're going to see more hires from the data center world into Bitcoin mining going forward, because people are going to realize how difficult it is to make that swap.
Yeah, I think that the backdrop of the CoreWeave deal obviously colors this a lot, because if you look at their most recent investor presentation, which I'm going to pull up here on the screen, Core Scientific has been projecting that they will have 200 megawatts of their retrofitted capacity online by the end of the first half of 2025, 270 megawatts at the end of 2025, 382 megawatts at the end of the first half of 2026, 500 megawatts at the end of 2026. I can't help but wonder with this Alabama deal, is this Core Scientific's way of guaranteeing that they have a data center that will actually operate to industry standard for CoreWeave when they said that they were going to have capacity for them? I wonder how well the retrofit's going, and if this data center acquisition is somehow an admission that actually this is taking longer than we thought. I always thought that the timeline they gave was incredibly aggressive, just from what I've seen from research and talking to other industry professionals of how long this takes to, or how long one of these data centers takes to greenfield, let alone retrofit from a Bitcoin mine, which we've never seen before. But yeah, I mean, they're looking to pour $400 million into this data center when and if the acquisition goes through, and they're going to make an initial capital investment of $135 million. So I wonder if we'll see CoreWeave hosted here. Who knows? It's an interesting development though, for sure, because this is the first time that CoreSci has really not pivoted away from, but supplemented their original strategy of retrofitting Bitcoin mines for HPC and AI load. Previously, they leased rack space for AI and HPC at tier 3 data centers just to kind of get their foot in the water, right? And start booking revenue for an HPC business line. But this is the first time they've kind of gone the bit digital route and said, you know what, we're just going to buy the whole farm and then see what we can milk out of it. So that's what I would be keeping an eye on. Is CoreWeave going to be hosted at least partly in this facility? TBD.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale? We've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
Let us go to our Cry Corner.
So giddy for this. All right, Will, what is going on with Javier Milei and memecoin scams?
Javier Milei, the president of Argentina, was embroiled in a memecoin scandal where he tweeted out contract address and name for a new Solana token, LIBRA, and urged his followers and Argentinians to purchase the token. The investments would go back in towards ventures in the Argentine economy and generally just to lift businesses in Argentina. What ended up happening within the next few hours is that the launch process of launching the Solana token essentially failed after the founding team behind the token started purchasing units of the sale immediately, and they had all information about the launch, etc. And they just purchased large gobs of the token as it went out the door. And then Javier Milei deleted his tweets and backed off his initial endorsement, causing not only the initial price to dump dramatically, but also leaving the founding team holding the bag. Now, this would be like not such a big deal, of course, if the bag went to completely zero and the founding team was the only one holding the bag. But there was quite a lot of other people who got into this token with size, purchasing a few $1 million, $5 million clips, and their token holdings went down quite dramatically. The founder of a meme coin project named Hayden Davis, who was working with Javier Milei, claimed to be working with Javier Milei, and you can see him on this hilarious photo if you're watching on YouTube or on CoinDesk TV, put out a video that was quickly memed into Twitter Hall of Fame, where he explained basically what I just told you, and how the launch process went so poorly, and how Milei had sort of rugged the team that was supposed to rug everyone else, and that he was sitting on $100 million in stable coins after the launch. And he was going to either inject it back into the chart, meaning he's going to purchase the token and try to bring the token back, or he was probably going to do some sort of pro rata distribution of the dollars back into the meme coin economy. However that would be done, I'm not sure. So he was memed into existence from that video. Fairly quickly after that, it became apparent that Hayden Davis and a lot of the other people at this project called Kelser have been doing this for quite a while. They've been working on a ton of different pump and dump meme coins, including the Melania launch, which is the wife of Donald Trump. She has a token, Melania. And then another project called M3. He was on Dave Portnoy, getting grilled by Dave Portnoy. Dave Portnoy was a part of this. He went on to CoffeeZilla, a really famous YouTuber who investigates crypto scams. And by the end of this week, it's just become apparent that not only is everyone involved in this team and involved in this project looking awful, like just so terrible, but the depths of the Solana meme coin factory hell has transcended to like the 6th or 7th layer here. It's very, very criminal. I'll give a break and let you talk about the CoinDesk scoop that our friend Danny Nelson broke about.
I think it's going to take a while for us to fully understand what happened here, but a pretty good glimpse into this from our friend Danny Nelson at CoinDesk, and a scoop that he had where he obtained text messages from Hayden Davis to, I guess, one of his colleagues. And in this text message, he said, I control that, N-word, Davis claimed in a text message from mid-December, adding, I send money to his sister and he signs whatever I say and does what I want. So that's pretty damning. Danny's a great journalist, a great friend. I trust his sourcing on this one. And I think the biggest thing here, regardless of blame, going back to what you were saying, Will, about this being deeper than just the Libra scam, that this outfit did a bunch of the different meme coins. As Nick Carter points out here, I think this is a good take. Meme coins are unquestionably over. The idea that meme coins are somehow a fairer launch than other tokens in the past that were VC backed, like we saw in the last cycle, etc., is unquestionably not just in doubt, but completely obliterated. That point, it does not stand on a leg anymore, and that essentially this whole cottage industry of companies or influencers or shadow operatives that have used these meme coins to basically enrich themselves and have launched different meme coins and been behind some of the largest ones is probably going to crumble after this. Maybe that's a optimistic reading of it, but I think
that's kind of an optimistic reading.
You think so?
Yeah,
I think at least it blows the cover of a lot of these things. I have often said on the show, and I still stand behind this, that at least meme coins are like the rawest, barest form of gambling that crypto's ever known. They're not trying to, they have no pretense of value or utility, and the people throwing them around are not acting like they're changing the world. So that's like the one good thing I can say about them, as opposed to like ICOs and other like DeFi tokens of the past. But I do think this is a good point to talk about how like these are not organic, investable tokens, right? Like, or like their appreciation is not organic. It's all orchestrated like we've seen in the past. It's just through different media. But anyway, you think it's optimistic to say that this whole cottage industry is going to fall apart at the seams now?
I mean, it's bad. And like someone who is involved with it very deeply, Hayden Davis, and it looks like his brother and father were involved with this as well. They're exposed. Some projects associated with Jupiter, a popular launch pad for Solana tokens, were also exposed. So you have like parts of the meme coin economy being exposed, but like, I don't know, people want to make money. They're going to launch new stuff. It's going to be even dumber. It's going to do well. Perhaps this kind of stops it for the moment. But if the Donald Trump rug couldn't stop people from launching other ones, I don't see why it's going to stop because there was one egregiously poorly executed one like this. Let's kind of close out just with some final thoughts on it. Like the tweet that I pulled up earlier, maybe you still have it, was just like pretty funny looking at the Mount Rushmore of people who are now involved with meme coins. And Dave Portnoy is on there, Barstool, Javier Milei is on there, Hayden Davis is on there, Melania is on there. What does this do for people's reputations long term? I think it's pretty clear. It's really, really terrible. And people are not going to look at these individuals the same way. However, it's odd because they're still in positions of power. Donald Trump is not going to be leaving office because he launched a meme coin and is getting funding into his personal assets from it. The place I really kind of want to finish on is like, we do have this broader institutional adoption of Bitcoin for the first time. We started off with one of our segments talking about institutional adoption of Bitcoin mining stocks and that being overweighted versus what it was prior. Yeah, we have these meme coins. And so you almost have like a barbell approach where there's just like crazy town, anything can go, crime season, as they call it. And then you have like very stood up institutional stuff where people want actual adoption of Bitcoin to occur. Any thoughts on that as we close that out?
It's an absurd place to be when you've had two presidents involved in meme coins, like two presidents of developed nations involved in basically rug pulling people. It's so far. So far. It's like the domino meme, like Satoshi Nakamoto releases the Bitcoin white paper, Trump launches a meme coin.
Yeah.
Sometimes I have to pinch myself, I feel like I'm in a fever dream with all this, but that's basically it.
Speaking of being grown-ups in the room, everyone's listening to this should check out opnext.dev. Opnext is the Bitcoin scaling conference that Blockspace puts on twice per year. The next version of it will be at the MicroStrategy HQ in Tysons, Virginia, Friday, Saturday, April 11th and 12th. I will be there. Charlie Spears will be there. We have an amazing lineup of speakers, people from Coinbase to Arc Protocol to the authors of various BIPs. It's going to be an awesome time talking about the future of scaling Bitcoin. So check that out. I got nothing else. Enjoy your weekend. Colin, you got anything?
Nope, that's it. Hope you all have a good weekend. We'll see you next week.